Welcome back to the street. Indian non-bank lender IDFC and IDFC First Bank are aiming to untangle what once was a complicated structure. Last week, the company's boards approved a reverse merger aimed at simplifying that very relationship and streamlining regulatory compliance. The deal is the latest in the consolidation of India's financial space, which will see IDFC First Bank issuing 155 shares against every 100 shares of IDFC. All this, of course, is still subject to the Reserve Bank of India's and shareholders' approval. And I'm very pleased to be able to welcome Mr. Vaidyanathan. He is the Managing Director and CEO of IDFC First Bank. Vaidya, thanks so much for being here. I've got to ask you first and foremost, in terms of, how this impacts the people who currently hold shares in your bank, perhaps not, tomorrow, but moving forward in terms of what this enables you to achieve in terms of your strategic goals.
Well, it's a great question to start with. First of all, thank you for inviting me to your show. It's a pleasure. Now, basically, think about it like of global corporations like ICICI Bank, of DBS Bank in Singapore, maybe JP Morgan, Bank of America, ICICI Bank, HDFC Bank. They don't have founders, they don't have promoters. They're all publicly listed and well-traded stocks. So we will think of us like such an institution. And once, think like a bird has been set free, and we can grow and grow and grow forever. So it's a public institution.
Now, there's been a lot of attention of late when it does come to the Indian financial sector, and I suppose more prominently because of the outperformance that we've been able to see in terms of the numbers, in terms of the expectations of growth. Does this further assist that case? And again, obviously because the approvals have to go through, but if we're talking on a 2 to 3 year timeline, how much does this unlock in terms of growth potential?
It unlocks a lot, actually. First of all, in our bank and even in IDFC, there were speculations, there were rumors whether merger will happen, when it will happen. So all those speculations are over, uncertainty is over, and that's really a big deal. The second big thing is that, like I said, with a diversified public holding, you can raise capital if you really needed to. We have, fantastic, we have very impressive, let me say, strategic goals for ourselves because the Indian market is so large and wide, and we're still a tiny player. So we think that we can grow at a good rate for a long time to come with a holding like this.
Mandy, jumping in here, your shares, sir, are currently sitting around the 79 mark, and correct me if I'm wrong, but I think if they reach 85 by mid-July, in other words, really just a few days away, then you'll be able to qualify for inclusion in the MSCI Standard Index. Do you think that you're going to make it?
Well, you people know the markets as well, probably better than me. Actually, we are not looking at this August or later. But in our mind, there is absolutely no uncertainty we will get there, whether now or a little later, because we are a growing organization in a growing country. Our GDP is growing at 7% odd, nominal is probably like 11 or 12%. Our bank is growing at 25% per year. On the loan book side, our deposits are growing at 44%. Our incremental return on equity on the retail business is 20%. So these are very good numbers, and we feel that eventually this will reflect in the market for sure if you wait 2 or 3 years or whatever.
But MSCI inclusion would be a benefit, I'm sure. Can you quantify
it's a big deal.
What that would mean for you if you did manage to get the inclusion? Well,
that would be a big deal because, I saw the November report which says that if we get there, close to $170 to $180 million purchase of a stock has to come from the index, and it's a big deal. And really, we are touch and go from there. Like I said, whether you make it now or later, in our mind, we have no doubt because we look ahead. We are very confident, and frankly, it would be an honor to be part of MSCI Index for us.
I've got to ask you, Vaidya, because, so much of a bank's performance is obviously intrinsically tied to the performance of the Indian economy more broadly. So from what we've seen so far this year, and I suppose what you're looking at in terms of the hard data, are you expecting some considerable loan growth? Are you expecting, conditions to improve considerably? Because, everybody watching is thinking, oh, I've got to buy into India right now because that growth potential is just massive. But is that what you're seeing for, say, the next 6 to 12 months, that we're going to see that proved out?
Well, people are thinking like that upon India. They're right, let me tell you, because we are insiders of this country, and we can see for ourselves day-to-day basis how the country is growing, how infrastructure is coming, how under-penetration is getting solved, how technology is reaching credit and finance to the bottom of the pyramid, how bottom of the pyramid is beginning to grow. So these are like macro, massive moments happening in the country. So they're right. For our India's credit market, let me say about a 15% credit growth would be a fair expectation in the near future. And for our bank, a 25% credit growth would be a fair expectation with stable asset quality.
Your deal is just the latest in a wave of consolidation in the Indian financial sector. Vi, did you expect more consolidation in the Indian banking sector? And what would that mean for customers overall, considering that means also less competition?
Well, the Indian market is growing market, so you don't really need consolidation. You can even grow this is not a mature stage country where you need to consolidate to grow. You can, in fact, have more institutions and the global growth. That's where this country is at this point of time. But having said that, ours is really more a consolidation of two shareholding structures. There is no operating business in IDFC Limited. It's just a shareholding getting aligned for simplicity purposes and administrative purposes. There'll be one accounting standard, there'll be one regulatory requirement, there'll be one statutory compliance to make. So those are the benefits here. But in a country as such, it's my view that actually you can spawn more institutions and they could all grow. It's that kind of country.
I've got to ask you, because you mentioned 25% credit growth in terms of your own expectations, and that, in your mind, is a reasonable expectation. But considering all of the, I suppose, attention India's gotten lately, all of the fiscal spending that is being outlined, the expectation that you are going to see some pretty significant per capita growth as well, is there the possibility or potential for outperformance in your mind? Perhaps, I don't want to get you into any kind of trouble in terms of, guidance provided for this year, but I'm talking more broadly, like in terms of expectations maybe 3-5 years out, considering the trajectory that India's on.
No, India's on a massive trajectory. If you track the story of how India's infrastructure is growing, the roads, ports, and all that, it's really phenomenal. We can see it for ourselves. Now, to us, of course, we guide what we guide, and we want to stay to that. Our biggest joy or drive is how our operating profit is growing. It's not so much the loan growth. 25% stable, good quality growth. But our operating profits are rising or rose in 23 by 60% or 66%, while the loan book grew by 25%. So our incremental return on equity is really very strong, and we are more we are quite happy with that.
It's been a pleasure to talk to you, sir. Thank you so much for your time. We've been speaking with V Vaidyanathan of IDFC First Bank. Street Signs is back in just a few minutes' time. We're going to get a report live from the ground